We are today in the presence of a very rich panel. We're honored to have among us Bernard Daddy, who is the Director of the National Payment Systems at the Bank of Tanzania, overseeing all the operations of the payment systems and facilitating development of other digital financial systems in the country. Mr. Daddy is also a member of the SADC Payment Oversight Committee and the country leader in the EAC, so East Africa Committee, Payment Systems Committee as well. We're honored to have Ms. Gertrude Gadumbo, who is the project manager at NatSwitch, which is the company that's managing the central switch in Malawi. Ms. Gadumbo was responsible for implementing the national switch. Previously, Ms. Gadumbo was the IT head responsible for the SADC and Eastern Africa region at the EcoBank. She also managed a number of digital finance projects and is also a cohort of the Digital Frontiers Institute. Welcome. For the insurance regulators, I'd like to introduce you to Mr. Luc Nubisi, who is a senior insurance specialist for CIMA. So CIMA is the insurance regulator of 15 Francophone countries in West and Central Africa. Mr. Nubisi is an influent member of the committee who worked to improve insurance supervision standards in the region and contributing to the broader objectives of increasing insurance penetration in the CIMA region. Mr. Nubisi also chairs the International Association of Insurance Supervisors, the international standard-setting body for insurance, and also chairs the Financial Inclusion Working Group. And finally, I'm happy to introduce Elias Omondi, who is actuarial at the Insurance Regulatory Authority in Kenya. Mr. Omondi also works as a consultant in various international technical assistance projects, assisting insurance and pension supervisors to establish and automate regimes of risk-based supervision. Mr. Omondi, also you lead the Inclusive Insurance Innovation Lab in Kenya that inspires and promotes inclusive insurance solutions to vulnerable communities. So welcome to all. Bernard, I'll start with you. So it's been almost, we can say it's been a decade now since mobile money was first issued in Tanzania. Remember Zantel was offered its mobile offering Zepeza. So as you reflect back in the evolution of the mobile money in the landscape really in your country, what do you think are the main lessons that can be drawn from your country's experience? Please.
Thank you, Abdul. As you stated that we have been almost a little bit above a decade now when we started digital financial services development. And at that point, the financial inclusion was just about 17%. But over the 10 years now, we have moved to almost 65%. And we expect that by end of this year, we should be able to achieve 72% of financial inclusion in Tanzania. The main drive of these developments was digital financial services, which has contributed more than 54%, that is out of the 65. 54% is from the mobile network operators services. And now when we look at our numbers, we see that we have come to almost a saturation point. And therefore, we have now moved to the second level, and where we have developed our national financial inclusion framework. That is a tool that will drive our next undertakings. And mainly, we are going to concentrate on the usage side. Now, on the usage side, we want to promote different use cases. Interoperability obviously will be one of the driving agent for that usage side, but also integration with other services like providing microfinance and microinsurance and all other products. So that is our next step that we are going to take going forward for the next 5 years. And we hope we might achieve 78% of the financial services usage in Tanzania. Mainly also the key driver to that was to set up a neighboring environment in Tanzania. Remember, we started from nowhere, so the regulator, the central bank, allowed the test and learn environment, and that also helped for the beginners, for the investors, for everyone in the country to be able to be innovative enough to invest in Tanzania and therefore drive financial inclusion. So we developed our National Payment Systems Act. Prior to that, we used the Bank of Tanzania Act, which was more of a general provision for regulating that sector. But in 2015, we developed specifically a National Payment Systems Act, which together with the two regulations, that is Payment Systems License, Payment Systems Providers License, and Electronic Money Issuers License. All these helped us to have a playing level field, and therefore we are able to invite various types of investors because now they are regulated. We knew what are the requirements to look at. We knew when we want to control risk, what should we look at the product. When we want to make sure that our monetary policies are not violated, we knew what we should look at. And that gave us a very good tool for making or encouraging all the investors, all the developers in digital financial services.
Great. Obviously, digital financial services was a key enabler to reach where you are right now at 75%. And uniquely, of course, is the test and learn approach that you've taken in really letting the providers enter the market, letting them invest into these service providers, and then you would enter at that point in time and see how you would regulate this landscape. So, Gertrude, we've heard from the Tanzania's experience. You've already integrated a number of ATMs and point of sales in your national switch, and you're also right now at an advanced stage in integrating mobile network operators, SACCOs, MFIs into your switch. So what I would like to know is what is your experience right now in terms of engaging with the industry, and to what extent are the industry actually participating in developing the rules and approaches, for example, in interoperability?
Okay, thank you very much. Yes, Malawi has implemented a digital platform that facilitates interoperability. It is an all-inclusive, open-source digital ecosystem, and that encourages participation from all digital financial service providers. So when we're talking about that, we're not talking only about the commercial banks, but in scope of that integration, we have got the mobile money operators, the microfinancing institutions, the savings and credit cooperatives. We have all the commercial banks in Malawi integrated to the national switch, and you're right, we currently working with the MFIs. I think we have completed one leg on the use cases that are to do with card-based transactions, and we are also working with the mobile money operators for wallet-based transactions. Now, in terms of engagement, it is very important that there's high-level and lower-level collaboration for the whole industry if interoperability or at this scale has to be achieved. So Malawi took a different approach because the national switch is managed by a not-for-profit making organization that is fully owned by the industry. So when I'm talking about the industry, I'm talking about the commercial banks, the mobile money operators, the MFIs, they all have equal shareholding into the national switch. Having said, so in terms of engagement, we engage them at different levels. From a governance level, we're looking at the structure of the board of the National Switch Limited. So we have all the CEOs of all these financial institutions sitting at the board as the directors for the National Switch. So in terms of policy formulation for the National Switch Limited, they are part and parcel of that process. They are also the participants, which are basically our customers, and as far as the National Switch is concerned. So in terms, it was very easy for us in terms of getting stakeholder alignment as well as buy-in from the whole industry, because these are the same people that have set up the company. These are the people that they have a mandate to make sure that they see the operations of the National Switch picking up and being sustainable. In terms of the operational issues that you have talked about, formulating the operating rules and guidelines at the National Switch. So the approach that we take as well, it's a more collaborative effort as well, where we engage all the stakeholders. So I'll give an example when we were integrating the MNOs. So before we actually go into the integration at the technical level, what we do is we engage the stakeholders and everyone that is going to be impacted with all those rules, so that they are the ones that are formulating those operating rules. So what we say is the National Switch is owned by the members. It is also governed by the members themselves. In addition to that, right now, the National Switch, although we are in an operational mode where we're switching live transactions, we are also carrying out some other projects where we talked about integration of the MNOs and the MFIs. We are a team of 6 people. And the reason why there's a lean team that is managing this institution is we're looking at, we want to move with the industry. Every step that we take, we move with the industry. So in terms of capabilities, where we have skill gaps and so forth, the owners of the company, who are the industry players, they come in and beef up, so that each and every process that is being implemented, each and every policy that is being implemented, they are part and parcel of that. I'll give an example. Issues to do with internal audit. We don't have an internal audit function. So the banks, as well as the MNOs and the MFIs, on a rotational basis for 2 years, they give us a team that is going to do that is going to provide internal audit services at the National Switch. Now, the engagements, when it comes to the industry, is not just restricted to the industry players, but you know that the national switches are more of a national interest. And the reason is, end of the day, the objective is the national switch is just laying down the rails onto which financial inclusion can be driven. Now, the private sector, the industry, cannot drive financial inclusion in isolation without involving the government or the central bank. So when it comes to collaboration and engagements, the government, through the Minister of Finance, has to be involved. And the reason is that the Minister of Finance is the custodian and driver of the financial inclusion strategy for the nation. They also own the roadmap for the country. In addition to that, we also engage other government institutions like Ministry of Justice. We work together with the Central Bank, Reserve Bank of Malawi, and the whole industry to come up with laws that are specific to digital finance. And those laws are the ones that give the central bank a mandate to come up with regulations, to come up with directives, and also to provide them with a framework for oversight and as well as a supervision for the whole digital ecosystem. Thank you.
Great, thank you. So, no, it's interesting how you mentioned you've had all the different stakeholders involved, and the idea of having skin in the game, having them involved, having buy-in, stakeholder buy-in was a big role in terms of how you managed to get everyone on the board. I want to move to the insurance regulators. And Luc, so insurance penetration in CIMA is getting there. I would say there's a huge opportunity. We're already seeing, for example, products like M Insurance mobile insurance that are now being introduced in some countries in your jurisdiction. So maybe looking at that specific product, the mobile insurance product, I'm sure it's having huge implications in terms of your regulatory and supervisory frameworks. How are you looking at it in terms of the consumer protection aspect, really, of in your regulation?
Well, you know, the mobile insurance journey with SEMA is a long and passionate journey that started something like 10 years ago when we identify mobile technology like a key driver to increase insurance penetration, which were very low, less than 1% 10 years ago. So we started our journey by learning. We wanted to understand what's going on in other regions. And we gathered, SEMA, the regulator, take the lead and gathered in 2014 many specialists to learn, in the learning sessions, to learn what should be done to enable the promotion of mobile insurance. So we came up with the first ever framework just 1 year later, which is a kind of basic framework just to allow the activity to happen in our markets. Maybe it's good to remind that SEMA is a unique regulatory body for 14 countries in Central and West Africa. So we have a unique insurance law or insurance code in force in all those countries. So you can understand that changing the rules or make some amendments should involve at least 14 governments. It's not easy. But we have set up a kind of permanent dialogue with the industry. So that's the key to the main aspect of our strategy to promote. I speak about mobile, but it's the same for other aspects of inclusive insurance. And we know our role. You know, we are supervisor like some other supervisor. We have in our mandate the market development, which is not the only one. We also have consumer protection. So we trust that there is a balance between this market development mandate and the consumer protection mandate that we should reach at any time. And the key word in our objective is building trust, is trust. We believe that in our market, like many other markets, the trust has been destroyed by many practices from the insurers, the classical insurers. So today, launching new initiatives means also identify the obstacles that make people run away from insurance. So it's not because you say mobile insurance that the trust itself will come. And thankfully, we are a member of IIS, which is the International Association of Insurance Supervisors. And there we have 28, something like 28 principles, insurance core principles, which are essential elements that should be present in any supervisory regime in order to promote a financially sound system or sector, or insurance sector. So we are striving to comply with these principles. A recent assessment shows that we were half complying. So we still have a long road to comply with at least the majority of these principles. And by complying with these principles, we believe that we can rebuild trust in the insurance sector in SEMA regions, in SEMA countries. That is a permanent struggle that we try to do every day. Our daily job is to see if we meet the core principle, the insurance core principles. And as you said at the beginning, I have had the opportunity, the privilege to lead the work of IAS in the digital inclusive insurance. And we came up with some principles that are critical to mobile insurance and digital insurance as a whole. Among them, we can mention the partnership with all other stakeholders, especially telecommunication regulators. So that is something we are trying to do also. Sign some memorandum of understanding with telco regulators, central banks, especially to supervise the specific activity of mobile insurance. That is one recommendation from this working group of IAS. And you have also a lot of others recommendations. At the end of the day, what we think we should achieve, as I said, is to build the trust. So the policyholders should have trust into insurers, and the insurers and policyholders, so the whole system, should be trustfully, because behind you have a strong and reliable supervisors. And we know that with technology, things are moving faster than ever. So we should be prepared to anticipate, or at least to react rapidly. And the other things, we already observed some failures at the early days of mobile insurance. So the other things we should care for is to avoid a systemic failure of the system. It's good. We have a very, very huge takeoff of mobile insurance in the region, but our fear every day is to have a systemic failure. So the guidelines, or the mindset in which we work now is to put safeguards to avoid this kind of systemic failures.
Yeah, thanks. I mean, you know, rightly so, you mentioned that insurance in the past have had some bad reputation, especially, and the perception of the users are not quite where it should be. And it's interesting that you also mentioned that dialogue is one of the themes that keeps coming up with the different, with all of you. And also the fact that you mentioned about the principles, and I'm wondering, maybe we could get back to that after, the principles. I know it's mostly focused on supervision, but also how much of that principle resonates in the current principles that we're seeing right now in investor guidelines, and the other principles that we're also seeing with the smart campaign and whatnot. So, Elias, you know, you wear multiple hats. Maybe if you can take out the insurance supervisor hat for a moment, and I want to ask you about your role in leading the Inclusive Insurance Lab in Kenya. So my understanding is one of the main objective of this is to bring in SMEs and try to make them with the insurance products, so that the insurance can tailor the products to the SMEs, and at the same time the SMEs can understand some of these insurance that are available. So my question is, first of all, can you give me some examples, maybe 2 or 3 examples, where technologies like, I don't know, remote sensing, using weather, for example, climate weather, using data analytics, using smart contracts, blockchain, that are being used in Kenya right now, insurance products in Kenya. And then based on these examples, what are the risks that you're seeing right now?
Thank you. I'll basically try and look at this on a broad perspective, and this is based on the lessons that we've learned over the last 10 years. So, for instance, one of the things that we've come across is that most of the time we thought that technology was all about distributing up the product, or basically insurance product, to the poor. But what we've come to realize that it goes beyond that a certain cluster. So we are moving away from what we were terming before as microinsurance, and now bringing in some aspects of inclusivity, because we're looking into different vulnerable communities and businesses, because there is an exposure at different facets in life. So that kind of gives us the leverage that still insurance needs to be taken. given that only 10 to 20% of coverage worldwide have some form of coverage. Secondly, we've seen that the world is becoming more riskier, basically in terms of climate change. And this led to Kenya coming up with a product that highly focuses on weather. We have a weather index product, and there's been discussions on whether is it an insurance product, whether is it a derivative. And I remember before this particular product was allowed to come into perspective, different countries did shy away from it. But as the country, as Kenyan regulator, we took it in and decided, why can't we try a weather index that is highly focused on weather parametrics in terms of how much rainfall a particular area receives. And we've taken that also to livestock, whereby now we have what we call CLIP, livestock index, that looks at the level of greenness in a particular area. So if this particular area is not green enough, then farmers are given a payout, basically to buy foliage and feeds for their livestock. Interestingly also, if you look at all these particular aspects, we've seen the need of having an holistic approach in terms of how do we provide insurance and other financial products. And one of the things that we need to recognize is that insurance tends to be, it's not something that is bought. It has to be sold. So given that aspect, then it gives a question, how then do we package this? Do we provide insurance with some form of savings? Do we provide insurance with some form of credit? So it really requires us to think about how do we allow a holistic approach in terms of delivering these particular products. Now, within the inclusive lab that I've been leading, there's a lot in terms of digital revolution. And one of the things is that we've seen the rise of blockchains into perspective. We're moving away from paper to more big data. And this really brings in other risks that needs to be keenly looked at. Now, within that particular aspect, then it's quite important to have what we call regulatory clarity in terms of how do we harness innovation, at the same time ensure that we don't erode and weaken the financial system. So regulatory clarity is one of the biggest aspects that will need to be put in place in terms of how do we harness all these innovations, because innovation is very fragile. Regulators give innovation a death kiss just by the way they might perceive innovators. So it's quite important to have what I call optimal regulation, and look at alluded into this. How do we ensure that there's a great or very good balance between consumer protection and also at the same time you develop your market going forward? Because most of the time regulators tend to sit on the consumer protection side. Then the market becomes a place that cannot harness some of the great innovators that might come into place. Within also the last couple of years, we've seen new products. And one of the greatest products that came up in Kenya is what we call MTIBA. That was a health insurance product that was packaged or embedded within a saving component, a health wallet. So this really tells you that the products tend to evolve, and the regulator and the regulatory systems also have to evolve. And currently we've been talking about RegTech, SupTech, that regulators need to start enhancing to ensure as the products keeps evolving, also the regulatory standards evolve with that. This market also have seen new players. Traditionally, what was coming into our perspective was more of traditionalized companies that have traditionalized insurance products, but currently new players are coming in. We've seen supermarkets trying to offer insurance in Kenya, and for instance, there's a company called Naiva Supermarket that currently is trying to provide insurance through their outlets. Mobile insurance network in Kenya has really penetrated. Up to around 40% of Kenyans currently own a smartphone, but that does not really limit to only that we have to derive technology on the smartphone side, but also USSD is being applied, and the internet penetration. Currently, over 14 million Kenyans have some form of internet coverage. So that really gives us, brings a challenge of new players. We have MNOs, the TSPs, the technological service providers coming into perspective. Then it begs the question, then how do we ensure that that particular balance is still maintained? Consumer education is something that also has come into perspective within the last couple of years. Within the Insurance Innovation Lab, we intend to do what we call customer learning journeys. One of the things that we have to note is that when we look at the financial products, they are developed at an office, whereby we try and think of what the consumer might want, rather than helping them to tell us what products they want. So we are moving away from business to customer, now to customer to business. The customer should be able to inform what they really need and what they really require. And one of the products that we've seen is a product that is currently being developed by Microinsure in Kenya, and also there is a tea plantation zone that also has developed their own products that are specifically focused within that. Another learning that we've seen, especially in African countries, is that governments are trying to reduce the protection gap. For instance, in Kenya, we've been talking about the Big Four agenda, the universal health care, issues of food security, issues of infrastructure. It brings the question, then how do we come into this perspective? Does it require the regulatory systems to also evolve with time to ensure that they capture some of these items? Because if it's done on the other side, not really taking care of the financial system, government might want to cover that gap as much as possible, leading to shrinkage in these financial economy. So it's quite important to look at how do we have a holistic approach, a multi-sector approach in terms of embracing all these emerging issues that is coming through. So there are different products that have come into perspective. There are different players that are coming in, and also that really brings in the issue that the regulators need to have optimal standards, and which provides clarity on what is required, because innovation is quite fragile, and basically innovators do not want you to take much time, because innovations really have to be managed within a specific time frame. Thank you.
Yeah, thank you, Elias. I think the biggest risk really is for the regulator to maintain that balance, making sure that they don't stifle innovation, but at the same time they take into consideration the customer care and protection. And I'll come back to you, Bernard. So now digital financial services in your country is continuing to develop. Mobile money is now scaling up. We're seeing new players entering the market, fintech and whatnot, and so I'm sure it's going to cause a lot of stress, oversight stress, regulatory stress out there. But also at the same time, and we've heard from Elias how there are also emerging technologies that are coming up that can be used by the regulators, for example, like real-time account visibility or artificial intelligence algorithm to detect fraud, abnormal activities, and so forth. So RegTech is the coined term. So I'm wondering, what is the Bank of Tanzania doing to prepare itself for this development right now? And are you looking to, for example, change your practices? Yeah.
Changing practices, I don't think that's the way we are going to do. But like you correctly said, we have 6 mobile network operators who are now licensed as electronic money issuers. And we have more than 34 fintechs licensed as payment services providers. So we now have their database, and we think with the development of the what we also call all-inclusive switch, we'll be able to get the data or information, and which will help us to conduct our oversight function. So essentially is to continue with the engaging our stakeholders, and in so doing, continue to make sure we are creating a level field play, and therefore come to the point where we be able to monitor and assess their performance in the market. But going forward now on the oversight side, we also are planning to form a sandbox, regulatory sandbox. This will help us, of course, this came from a standpoint of view that we have fintechs which are new. They still want to experiment their products, so you cannot license them day one. So we want to formulate a sandbox where we incubate them, and maybe through certain period, 6 months, 1 month, we assess again and see if they now need to be licensed and be full compliant to our legal and regulatory framework. So in so doing, we expect that we have a continuous and a vibrant payment systems environment in Tanzania. And as I said before, we expect that to drive the usage of digital financial services, and therefore financial inclusion and growth in Tanzania.
Great. And so Gertrude, going back to you, you mentioned earlier how you're engaging with the industry, and but at the same time you're being cautious. You're letting maybe the industry take the lead in terms of, you don't want to stifle their investments. Also, Malawi is also a country that is 90% rural. So given now that mobile money is starting to take up rapidly in Tanzania, I think right now you're about 54% or so that uses an active mobile money account. So what are you going to do in ensuring that consumer, that the digital financial services are provided responsibly, are delivered responsibly as the mobile money takes up and as more players enter the market?
Well, thanks a lot. It is very true that the majority of the population in Malawi is in the rural areas or some urban areas. And now when we're talking about rural areas, there are so many other challenges that compound the issues in terms of deliverance of digital payments, digital financial services to the remote areas. One of them is even penetration of internet to all those remote areas. So we have seen the regulators in Malawi coming together and working together. The Malawi Communication Regulatory Authority, together with the Central Bank, Reserve Bank of Malawi, they've got to a point where they have signed a memorandum of understanding to ensure that as there is drive on financial inclusion and trying to reach out to the masses in the remote areas, similarly for the internet service providers, they are also they should also be motivated to ensure that they bring internet services to those remote areas. On another note, I also want to point out from a regulatory point of view to say that the Reserve Bank of Malawi, they have put structures in place that ensure that that promote financial the proliferation of digital financial services, not only in the urban areas but to the rural masses. And one of the undertaking is they have put structures in place where they have got units that are specifically driving financial literacy. They also have got another unit that is driving agendas of consumer protection. Now, in terms of financial literacy, what the regulator has gone a step ahead to come up with a national level financial literacy strategy for the whole country. So what that does is at least it gives you guidelines on how you're going to approach issues to do with financial inclusion. They also work with the Ministry of Education, Science and Technology and they have introduced in the curriculum for the secondary school education financial literacy. So in addition to that, they carry out awareness campaigns, and when they're doing the awareness campaign, this is collaboratively with the Ministry of Education, the industry itself, the players, and the central bank. So the objective end of the day is to ensure that those people that may be even illiterate, not only financially illiterate, they are equipped with the capabilities and the skills to be able to manage their their finances, as well as it gives them an opportunity to be aware of the digital financial services and products that are on offer. And it also gives them the capability to be able to make their own decisions in as far as finances are concerned. The focus points can be budgeting, micro savings, and on how they can build up capital to start small little businesses. And when I'm talking about capital, I'm not talking about something big. It can be $100 or less than $100, but to those people, it's a big deal. When we're talking about financial inclusion, usually it's not just, financial literacy. The drive is not just on the demand side where we're just looking at the consumers, but we also focus on the supply side. So the central bank also has gone a step ahead where they're now engaging the merchants, the small stores, people in the markets in the rural areas. And I think they're coming up with a regulation. They've just gazetted it and presented it to the Malawi Chamber of Commerce to have a look at it. And the objective is to drive digital financial payments, whereby every merchant and anyone that is selling services or products, they have to accept payment in digital form, not only cash-based payments. So it's going to become a regulatory, and I think they're going to come up with a threshold in terms of an amount on which it is mandatory that it has to be in digital form. So this is something work in progress, but what that tells us is we have a regulator that is keen in ensuring that we drive financial inclusion, not only in areas where people are already included, but also in the rural areas. Now, for those that are already included as well, we're also looking in ways on how we can extend the product offerings to make sure that it really makes sense, and then these operations for the financial institutions or the service providers, there is a systematic sustainability of their operations. So in terms of the consumer protection, we are all aware that consumer protection is one of the key tools in terms of responsible finance. So it is very imperative, and that department, what they do is they look at data protection, security issues surrounding customer data. Not only that, issues to do with identification of each and every customer. So we're talking about issues to do with KYC and the Reserve Bank, when each and every digital financial service provider is seeking to be licensed. I think some of the guidelines and the requirements is that they have to make sure that they have a framework of anti-money laundering and combating financing of terrorists. Not only that, they need to have a strong legal risk as well as risk framework. So they have given guidelines in so many areas, even in the acquisition of agent networks, onboarding of customers, and so forth. So this is being done basically to make sure that customer data, customers' interests are also protected. In addition to that, they have also established a unit that looks at customer queries. So me as a consumer, if I have a query with my digital service, financial service provider, I have a line which I can dial into the central bank and complain. So what that has done is to heighten customer, it has resulted in improved and enhanced customer services for all financial service providers in the country, because the queries are now being taken to the highest level so that they are addressed. So in terms of regulation, trying to reach out to the masses, all this work is being done so that we encourage not only awareness, but sign up to digital financial services for the people that are really fragile. And when I'm talking about fragile, the people in the rural areas, these are the people that economically they are very fragile. Anything that is going to just disturb them, be it when they approach digital financial service providers, they're not handled properly, they can abandon the whole they can abandon the whole thing and they'll never attempt it. So the battle, the drive towards digitization of financial services will not be won. The other thing is, it is very imperative, and the central bank is continuously engaging the digital service providers to ensure that when it comes to dealing with the consumers, especially the people that are resource poor, it is very important that you carry them through. So those awareness, even from the central bank or the service providers themselves, you need to put a framework where it starts from before they can access digital financial services, even when they're accessing digital financial services, as well as post-access of digital financial services. So we're talking about terms and conditions. I think this has been talked about in other forums. And we're talking about being transparent in pricing. And when we're talking about pricing, we're talking about total pricing. So for me, that is working for the national switch. We do have an interchange fee. But you find that some financial institutions, they will have an add-on. That needs to be disclosed to the consumers before the consumer makes a decision to go on with that transaction. So all these regulatory frameworks are in place to make sure that we win, and the consumers that are excluded, they feel comfortable with the whole process for signing up and awareness.
Great. Sounds like you're doing all the right things in ensuring that digital financial services are delivering responsibly. And so I hope it will bear fruit as this develops. I do want to take some questions from the audience. So maybe I'll give one question to the both of you, Luke and Elias. Could you share maybe one example, a role model where good practices are being applied in the insurance regulatory space that are pragmatic and that are really being applied on the ground? Do you know of, and that are taking into account consumer protection? Maybe Luke, since you sit in the IAIS working
That's
group.
a very tricky question, but what we used to mention Ghana as a good example, and it's not perfect. There is not a perfect case, but in our work, I know that Ghana is most of the time taken as a good example of promoting or enabling mobile insurance. Maybe I will come back on the question, but that is sure. One case that people can go and read.
Please. Elias, you have anything?
Yeah, I think in East Africa, essentially, if you look at the insurance space, I think Kenya has been at the forefront because of the digital technologies that companies are being allowed to operate in. And one of the greatest examples is whereby we are allowing farmers. So for instance, there's a particular product whereby if, in case farmers plant and there's no rain and they cannot really be able, there's no germination at all, there's seed placement whereby they get tokens. So you are given a token, and that token, whenever you are going to plant, you'll get a token inside the seeds, the bag of seeds. That token, you're going to send the code that is in that token. It will be able to pick up the GPRS location of your farm, and also it will be geotagging that particular farm. After that, in case there's no rainfall and the seed has not germinated, then you are given another packet of seedlings. So that is one of the examples whereby we are looking into reducing that particular gap between the insurer and the policyholder. So through that particular technology, there's no that aspect that you need to launch a claim, that you need to write some pieces of paper, you need to go to the insurer. You will only receive that packet of seed on the next agrovet shop that is in your locality. So that's one of the greatest examples. Another thing is that what technology is really trying to do is trying to create that transparency in terms of systems, whereby you can launch your claim using your mobile phone. Also, currently, you can buy insurance. And one of the greatest examples is what we call Pesa Bazaar in Kenya. Pesa Bazaar allows people to buy insurance through their mobile phone, through a website, and through that you can you get your documents delivered at whatever location you are in. So it kind of also ensures that customer centricity is brought into perspective. So there are great examples in which clients are given an opportunity to interact with the insurance products at the comforts of where they are.
All right, thanks. I think we have some time to let's take some questions from the audience and I mean, this is a chance. I mean, we have an audience, majority private sector people, and we at Making Finance, we like to advocate a public-private dialogue. So this is your opportunity to ask to the regulators here. So we're open for questions. Anybody? I think you've addressed a lot of the issues that they've had in mind. Or maybe let me ask this, since we don't have any questions, let me, if you can, maybe in 30 seconds, can you tell me what impact do you think the investor guidelines that we're talking about will have in your work, for example, in your regulatory work, and also for the industry? Maybe Bernard, do you have any comments you'd like to add on that?
Yeah, when I look at the regulatory guidelines, I mean, I see mostly on the customer protection, which is more of our main concern. We also see on the side of the investment being responsible to needs of the economy, which again supports the initiative of the central bank as a regulator.
Gertrude?
Yes, I think looking at the investor guidelines, they speak to what we actually do, and they do offer us the guidelines as we strive to achieve what we are doing, interoperability of the whole industry. I'll talk about even at investment level, ensuring that the investors are making a responsible investment. It is very key, because for us, it is an issue of reaching out to the masses and everyone else. So the outcomes has to be felt at that level. And now we also look at the legal risk and regulatory framework that provides guidelines when coming up with all these structures that are going to, that help us to govern the digital ecosystem. We also focus on the consumer protection, which is very key, as I've already pointed out. It is a key tool when it comes to responsible finance. And we also look at transparency. It is very important because some of the people that we're dealing with are really fragile, and they are the resource poor. It is very important they know what they are signing up to in terms of pricing, as well as the terms and conditions, as well as in terms of encouraging other cultures, changing the behavior, having an impact of behavior change, where they don't just use out all the money, but they are reducing indebtedness by them indulging in micro savings, so that they can build up capital for them to be able to engage in some sort of entrepreneurship. So they really do help. Thank you.
Luke, what do you think the investor guidelines, how will it impact your work in supervising insurance products?
Yes, thank you. Very quickly, I would like to elaborate a little bit on the ICPs as you asked. You know, there are three kind of ICPs. You have some ICPs that provide requirement for supervisors, like ICP number 1, which speaks about supervisor objectives and powers, those kind of things. So you have requirement that directly link to what supervisor must do and must be. And in this case, you have a requirement like independence, like clarity of the definition of the objectives. And when it comes to digital insurance services, one thing that it's required from supervisor nowadays is to have within the staff enough competence to deal with IT issues. That's kind of a requirement or standard supervisor should have to be proper to manage digital insurance, digital inclusive insurance. You have ICPs that indirectly requires insurer to do something, like ICP number 4 about licensing. So it is stated that supervisor should require any actor on the field to be licensed before starting activities. So indirectly, it means an insurer or any actor cannot start insurance business without getting a license. In whatever way you want, it's a license or approval or agreement, whatever you want, but you need to have a license before you start your activities. So what it comes to digital insurance, especially mobile insurance, we are observing a lot of new players on the field. And one requirement is to make sure that all those players have a clear definition in the regulations, in the regulatory framework, and they are licensed before they start their activity. I know there are a lot of debate on license or the meaning of license or the licensing procedure, but that is one of the guidelines or requirement we came up in our paper. You have also some requirement that directly apply to insurers or brokers, like ICP 8 on risk management. So the requirement is for all those players, insurers, brokers, intermediaries, and everyone, to have proper risk management system. We have spoken a lot about this, and we are looking at good practices on the industry side. So that is kind of guideline or requirement. And you have ICP 19 on conduct of business. So the most important part when the risk management, the power of the regulator is clearly defined, the most important part will be on customer conduct of business requirements. And there you have a very, very important rules. And the reason why we used to mention Ghana as a good example at the IS level, at least at Financial Inclusion Working Group, is that they have set up a framework that covers most of these aspects. It's a bit early because they just approved their mobile insurance framework, but they went through a learning process with the industry, and we just see that the results on the field are really probant.
Thank you. Elias, maybe in 30 seconds, how do you see the investor guidelines impacting your work?
Yeah, I would say that the impact would be anything in terms of from how their money is raised, because within that then we need to look at what stakeholders, especially the investors, will have in this particular space. So it will have an impact on how the money is raised, to an impact of how advice is given in terms of how do we interact with our customers. What will customers perceive out of this arrangement? To the particular point whereby how will be the services delivered. So it's more an interaction of all these particular aspects on, are we going to raise finances that will support this particular regime of innovation and digital transformation? Are we going to provide the right advice to the people who are going to buy these particular products? And will this advice basically resonate and come with sound practices that ensures that they are clearly protected within the value chain, within the financial value chain, to that particular point whereby the delivery is within as customer centricity on how they perceive that particular product or financial product really meets their needs. So the impact can really arise out of that. But to just bring this into perspective is that the need of clarity will be very important for each and every innovator, so that if regulators do not have a very clear standard on how they perceive innovators and how they perceive innovation, then we will not really achieve the intended purpose within that particular guideline. Thank you.
Great. Okay. So, if there's no burning questions, okay. Yeah, I see one question over there. So, if there's someone who can, there's no mic. You can mic around. Okay.
My question has to do with regulatory sandboxes. Mozambique has just declared itself a regulatory sandbox for digital finance. And I'd be very interested to hear the views of the regulators on whether they think this is a good idea. Are they pursuing it in their areas? Thank you.
Regulatory sandbox for digital finance. I mean, Bernard, you talked about using a sandbox in your approach to test some digital financial services. What do you think this approach would entail?
Thank you. Regulatory sandboxes are very good, and why should I say that? It's because to encourage innovation, it is very difficult to regulate some of the startup companies right from day one, because we need a lot of requirements to be met when they are still at the initial stages. But when you have a sandbox, you put them on the sandbox, the regulatory sandbox in that case, where you give them limited requirements, limited coverage, limited capital requirements. All these are issues, and therefore, in so doing, you are encouraging further innovation. You are encouraging further players in the market, and therefore extending services to more and more people in the country. So, like I said previously, we are also working on towards starting our sandbox. We have just come up with a write-up of what should be and what should be covered, and we expect to present it to our National Financial Inclusion Council for approval, and hopefully if it is approved, we are planning to start it in the coming January, to start now hosting startup companies. And this is all to try to encourage more and more companies or investors to come into the market in a better way, rather than starting fighting from day one. Thank you.
Gertrude, are you thinking of applying sandboxes in your approach? Maybe very quickly in 30 seconds. Because
Yeah, okay. I think I'll be quick on that. I think for the interest of financial inclusion, I think that it needs that should be considered, because then what you have to note is regulation is doing catch up in terms of the fintechs that are coming up in this in digital financial services. So if you can come up with light requirements specifically for that category, it will help to drive the financial inclusion initiatives.
Okay. Thanks. Okay, I think
maybe I'll just want to add a bit about regulatory sandbox, and I think this is now a buzzword in Africa, whereby everyone is thinking about regulatory sandbox, and everyone really wants to go with it. But one of the biggest things that we need to also be cognizant of is that we need to also to create that particular ground for innovators, because in Africa, most of the innovations come through funding that comes from the West or Europe. So how then do we also as regulators create that particular space whereby we encourage accelerators and innovators within our space, rather than just ensuring that, really we want to ensure that there is that financial bridging between innovation and also the sandbox, because you can create an environment for testing, then no one really comes into it. What happens to at the next level? Because right now, maybe what we might be thinking as regulators is that we need a sandbox. But once you create that sandbox, no one comes to it. So it has to be a holistic process whereby you have accelerators being enhanced, partnerships really being enhanced, and also really trying to come up with an innovation lab whereby the regulator itself will be able to also harness innovation by providing some form of capital. So it should be a holistic approach rather than just creating a sandbox, which maybe at times might not really have an impactful meaning to that particular regulatory system.
Very good. And Luke, any
Yes,
final words?
thank you. I agree with Elias on that. And I just want to add about the sandbox that IIS clearly encourages regulators to use sandbox approach. But we need to, I want to stress the fact that it's mostly about a mindset change, a new mindset that supervisors should have, because it's also the recognition that we regulators don't have all the knowledge, and you have industry that invest a lot in innovations. So you have many type of approach. It's not, you don't have only one unique approach to sandbox. It is encouraged, it is promoted, but we need to tell out the sandbox that really meets our context. And the idea here is to learn, and I was speaking about learning process, is for regulator to learn with the industry before putting in place a regulation or something like that.
Thank you. Yeah, please, go ahead.
In addition to the regulatory sandbox that is vested with the regulator, that is the Central Bank of Tanzania, we are also working with FSDT, that is Financial Sector Deepening Trust Tanzania. We're also working with the Ministry of Communication towards establishing a hub. And this hub will be able to accommodate maybe school rivers, college and university rivers. If they have their own ideas, they can come into the hub, do their testing. That is at technical level. When they graduate on technical issues, then that's when they graduate into being accommodated in the regulatory sandbox. So to us, I just talked about the regulatory side, but on the technical side, they also have being developed, which will be able to give a testing ground for all these startup companies. Thank you.
Thank you very much. I think we're deep into the red zone here, so we should wrap up. I would just want to say thank you all for your contribution. I think just to wrap up, I would like to say also that I want to coin the term the ethics of intent, and I think this is something that was mentioned this morning. I think Martin gave me a license to use it, so I'll just mention it. I think this is it has a deep philosophical message in terms of the role that public leaders have in seeking administrative change and policy changes to protect the vulnerable and the poor. So I think we're seeing very good examples in many countries in Africa. So again, thank you very much for your contribution. And thank you all for listening.
Great. I think I'm going to stand since I've been sitting for the most part. Thank you, AK, for that. You actually opened up the discussion on how does the discussion contribute to the investor guidelines, and this is what we're doing here. In this session, we had 3 parallel deep dives, and so Tiamoko will start first. And in his panel, I just wanted to share we had Saad Farouk from GSMA, Alex Taylor from Smart Campaign with the FinTech Protects, and we also had Francois from UNCDF as part of that discussion. And Tiamoko will report back on that to just share some of the discussions around the certification. So over to you, Tiamoko.
Thank you, Lori. Hi, everyone. So basically, we talked about what were the key risks. Okay, we were.
Use the microphone.
Oh, sorry. we talked about the key risks we encountered and in all the advocacy, sorry. And as well, basically, we mentioned data protection as one of the key risks we all saw in the MFS area. We talked about data privacy. We felt that that was something we needed to really cover in the next few months and years to come. We also talked about cybersecurity. Basically, cybercriminality is getting a lot more focus now. We, for instance, are having a lot of transactions, like billions of transactions per month. And then we're seeing a lot of activity in that scene. Also, we talked about stakeholder alignment. So basically, we have a lot of advocacy groups working on different topics, and we need to have one basic groundwork on all those laws and regulations we're coming up with. Also, we talked about, as a key risk to the industry, the lack of transparency. So basically today, when we go and sell products to customers, are we making sure that the fees are not hidden, that they have a complete understanding of what we're selling them? Today, for instance, we systematically make sure that when we send credits to our customers, we make sure that we explain clearly what they are buying, that the rates are not extortionate, because at times it can be. Some players we know in the market are doing that. And then we make sure that in terms of literacy, they are actually well aware of what we're selling again. And then it all boils down to trust. You know, we want to make sure that what we're selling is done with trust, so then we can, in the future, carry on in this space. Another key risk we talked about is around awareness. Basically, when you want to venture in a completely new environment, you need to make sure that awareness is at all levels. And then we stressed as well the awareness issue at even board level. I mean, we've seen that even when the board is aware of certain things, it makes the work a lot easier. A clear example is AML-CTF. Basically, the fight against money laundering today is taken at board level in some of our affiliates. We make sure that every single affiliate knows about that and that the board level is informed. Okay. For them, that way we have a proper buy-in, and then we get their support. Another area is regulators and investors. We are going across all our opcos. We have about 15 affiliates we have covered in terms of what we call the GSMA Code of Conduct. And that certification our affiliates are going through allows transparency, in data protection, data privacy. We make sure that customers' money is protected, and then we make sure that there is a lot of transparency around how we do manage the trust account. We make sure that if there are interests, the interests are sent back and then given back to our customers. That's another area we need to look at. And then basically that tells and sends a message to regulators in terms of how we do operate, and gives some sort of confidence to potential investors to come into this space. Mm-hmm. And then basically the sandbox initiative as well is something we feel will really help a lot. I think there's a lot that's been said already about sandboxes. And yes, so basically those was the wrap up on the main initiatives.
Great, thank you. Thank you, Tiamoko. So basically, there were the new initiatives, as Tiamoko mentioned, was the GSMA certification, which was just launched for mobile money operators in April. And then there were another certification will soon be released with the Smart Campaign and FinTech Protects. So there are emerging standards, but there are a lot of questions still, the hard issues that Tiamoko has mentioned here. So in the second panel, this was with CGAP, with Gerard. Thank you, Gerard, for pulling this together. So peace is here to represent the group and a summary of what they have shared and some of the takeaways that we will include in the next phase of the investor guidelines. So thank you, Peace.
Thank you, Lori, and good afternoon, everyone. I hope everybody's still awake. Our sessions mainly focus on practical application of the guidelines as it pertains to customer empowerment. And we really zoned into 3 recommendations, 3 areas. And one was around rethinking how we present terms and conditions. What we can all attest to is anytime you have to accept terms and conditions, you almost feel powerless. You just say, okay, where's the click button, check, move on. So what we were promoting is how do we go beyond acceptance of terms and conditions into comprehension of what you're actually opting in for. And this is where we were recommending introduction of gamification into the terms and conditions. So it no longer has to be the 2-page fine print document with a lot of legalese, but more in terms of an interesting way of really understanding what you're opting in for. The second item was around product design, ensuring that the way products are designed, the customer is able to make intuitive decisions in terms of whether it's the tenure of the loan, the interest rate. That is something they're able to really make a decision on as they navigate through the product acceptance. And thirdly is how do we go above and beyond digital acceptance of terms and conditions into also doing callbacks to gauge the customer's understanding. This is some of the things that we're currently implementing at Kopokopo, whereby we've designed a product in such a way that the customer can be able to play around with the loan sizes and the tenure and be able to view how that affects the fees. And in addition to that, we also call the customer to gauge their understanding. And in some instances, we've had to either cancel the loan, where we noted that the customer did not understand the terms, or we revised the loan terms to ensure that they are comfortable with what they're accepting. So this is some of the practical things we can think about when it comes to terms and conditions. The second area of the guidelines that we looked at was around fair treatment and transparency when it comes to pricing. We've looked at a lot of interesting examples in terms of cashback or incentives for early repayment. We've looked at what you can call pay as you owe, whereby you introduce daily rates. If you're able to pay back your loan in 1 day, there's no reason why you should be charged a fee for 1 month or 3 months. So really looking at how do we customize the product design to ensure it fits into the repayment profile of the customer. The other area that we looked at into is introduction of differentiated pricing. So a customer who's been able to grow with you, repay their loans on time, or be able to use your product in a regular fashion, one, you've gained more value from that customer, and secondly, you have a better understanding of their profile. So this should be reflected in the type of pricing that you offer these customers. So to encourage more organizations to really take advantage of differentiated pricing to be able to encourage this behavior in customers. Cashback, I already talked about that, and also in terms of varied tenors. And finally, what is key for us was around customer education and financial literacy, is really ensuring how do we design the education to the customer in a way that they can consume it. This is more through around interactive SMSs, where we've seen positive results. In the case of Empower in Tanzania, where the customer has been educated in terms of the pros and cons of early repayments and usage of savings product in terms of customer behavior. So really introducing interactive SMSs. Secondly is how do you leverage a comprehensive customer journey, especially in the first 90 days or the early days of the product, in such a way that from time to time you're able to continuously educate the customer on the terms, continuously educate the customer on your products, so that it becomes an ongoing education program. If you try and give a customer all the information at once, chances are they will forget everything. So really, how do you spread out that education in the early days of the customer? Another area we were looking at is how do we make this information available across multiple channels? We have, you can be able to access through SMS, USSD, online, so the customer can be able to access this information on demand and be able to develop themselves. And last but not least is continuous engagement in workshops and focus groups. This is to ensure that we're able to continue to identify the gaps that are there in the market in terms of customers' understanding of the products, and use that information to rethink the product design, rethink the communication strategy to ensure that at the end of the day, the customer is better off, and the number of calls that you're receiving in terms of customer management go down, the customer satisfaction rates go up, And as a business, as an organization, it becomes a win-win because your cost and time of servicing the customer is cut back and the customer continues to utilize your product. So those are really the key areas we focused on is how do you rethink the terms and conditions? How do we ensure a fair treatment in terms of pricing and transparency? And how do we continue to foster consumer education as it pertains to usage of products?
Wow, okay. That's fantastic. You guys really tackled the most difficult, enduring issues we've seen for many years, so it's good to hear a lot of concrete examples, especially you had a couple of fintechs in the audience and in the discussion. So the third session, Christine Alupo will be reporting back on this. This session on data analytics was included Judith from GIZ, Zaituna, and Stephanie and Josek. So there was a good discussion there with from different perspectives on data analytics. And after you.
Thank you. So we did have a diverse set of perspectives on the issue of analytics, consumer data, the risks, and possible mitigations. Just to say, our overarching point is that issues to do with how to make the end user better off from all these analytics and so on is something we need to do collaboratively. Regulators and policymakers with the industry, with a strong part of consumer education as well. So we took note that regulators and supervisors, we have to rise to the occasion in terms of catching up with what's going on in digital financial services. We need to find ways of understanding digital financial products and what the service providers are trying to bring up, new business models. So there's very much an issue related to capacity from the regulatory and supervisory side so that we can give optimal responses. We also picked up that data analytics have the capacity to reveal insights that can lead to better tailored products to customers because they enable you to understand customers better. And behavioral research informs product design, and really product design should be able to send you to specific segments. We learned about how Microsave, through a study that they did, segmented the population in Kenya, those that consume digital services, and why they do what they do. The third point we took was that there is need to redefine existing frameworks for consumer empowerment. They are there, quite generic, and so there's need to make them responsive to the risks that are inherent in digital financial services. That is a task that is very clear, given the fact that digital financial services are targeting those that are more digitally vulnerable than those that have been getting services from the traditional service. Our last point was that there is an incentive for fintechs and service providers to engage in this industry self-regulation and to create some hygiene around what they want to bring forward as a value proposition that is going to be easy for the regulators and policymakers to digest, but also for the consumers on the other side of the table. So that's how we wrapped it up.
Great, thank you.
I think maybe to start with, one of the reasons that investors work with us is because we are a front runner in the issues that are in the investor guidelines. And that's not only when it comes to digital financial services, but also when it comes to traditional financial services. Again, I mean, in the morning session, are we the walking dead? I think that's still a very relevant thing to think about. For us, I think there's two main things that we look at when we invest into institutions, whether traditional or whether digital. One is
I mean, let's face it, one is the credit risk of the institution. I mean, we are not going to flush away money. So that's a very relevant point. What we see there in this particular new initiatives that come up, digital lending, nano lending, etc., is that the credit risk in itself of the lenders there is something that we also saw in the early days in microfinance, where portfolio qualities might not be as good as we would like to see them, which also comes back to consumer protection, because in the end we want financial inclusion, not exclusion. This was a topic also raised in one of the panels. The second point is the social performance of the institution, or the impact, if you will, of the institutions that we work with. And looking at that, I think one of the key things that we have done in microfinance as well is to say, okay, there is certain levels of interest rates, and of course that depends on the context in which you operate, but there is also certain levels of interest rates that our investors are not comfortable with, even if circumstances might be different. So we established a traffic light where we said, okay, this is red, this is, let's say, yellow, so we can continue working with you. So to your question, how are we operationalizing this? We are looking at this sector very seriously, because in the end, we believe that it is drastically changing the world already. I mean, living in Kenya, I use M-Pesa every day, and that's not exaggerated. So we believe that digital financial services will certainly change the industry, and we want to be part of that. The question for us is, in which segment of that sector can we play the most value-added role? And for now, we have chosen the strategy that we work with several digital lenders, primarily in the SME space. So we are working with 3 institutions, one in Colombia, one in India, and one in Jordan. And we believe that we can, to a certain extent, learn from the lessons that we have had in microfinance and apply those to this industry, of course taking into consideration that it's not one-on-one the same. So we're still learning and trying to see how to do that.
Yeah, thank you, Jari. And I'd like to ask others in the audience, so maybe Imtiaz or Wim on the private equity side, just hearing, again, just some of the takeaways, how does this fit in your current investment scheme? Is it doable? Is it not? Is it reasonable? How can you in your operations and how you invest, given you're a private equity investor, for example, how can this be implemented further? So I see Wim behind the TV screen there, and Imtiaz.
Okay, sorry for hiding behind the TV screen here. No, this is excellent, and I really enjoyed also being in the 2 breakout sessions that I I had to split myself physically a bit between the 2. And what the kind of takeaways that we see here are exactly the ones that we want to, as an investor group, want to see more of, because this is actually why this group of investors started these guidelines, is to sensitize and familiarize everybody with the kind of issues that are at play here in the digital finance sector, and actually take those and build those into models that we can use to better assess the risks as investors. And especially when investors come in a very early stage, and the risks are still not entirely crystallized, so you need to start navigating how to manage those risks in that early stage. It's very useful to have some guidance and a framework, and that guidance and framework, you can design it from behind your desk, but actually you need to go to the people on the ground who are living it every day to understand how to evaluate those risks. So absolutely, we will operationalize it. We have some further conversations after this, after today, with the group of investors, how to actually turn this into a risk mapping tool that will help investors, both funders like Triple Jump, that also invest in loan portfolios and in equity, or the pure equity investors, or the sort of lending parties only, but all of them need to have better tools to assess risks and to maximize the benefits of digital finance, and sort of making sure that the negative impacts are minimized.
Yeah. Thanks, Wim.
Useful? Okay, thanks.
Excellent, excellent. Just Imtiaz, I see you over there.
Thank you, Laurie. For us as private equity investors, I mean, we typically come in to businesses that are already well established, profitable, later stage investors. So we tend to be more risk averse than the people with early stage capital. These are the brave investors. We are the ones who are always scared and we come in later. But a large part of our assessment when we're looking at any business we want to invest in is the cultural fit. Because when you talk about looking at policies and frameworks in place to be responsible, you can never tick all the boxes. I mean, you can't get a checklist and start ticking, do they do this, do they do that? Because there'll always be aspects of the business which will be new and innovative. And it's the culture, the responsible culture, that is very important to us. So, I don't know, 70, 80% of the work that we do is assess whether the person we're investing in, whether there's a cultural fit. And we want to invest in businesses that are responsible. We want to invest with entrepreneurs who, when new emerging risks come out, they're going to take the action that is required for them to be responsible so that the business can be sustainable, and that's the only way to manage risk. Risk is not about checklists, it's a cultural thing. It's an attitudinal thing, and that's what we look for.
Great, great. Thank you, Imtiaz. This clock here says we have about 40 minutes left, and I don't think you guys want to be in here for another 40 minutes. So, no, only because we're actually running quite late already, and I wanted to have just wanted to make sure that everyone had a chance to reflect on the discussions of the day, and I'm glad to hear from our colleagues here in the audience. Are there any questions otherwise? No? Okay, great, great. Please, let's thank our panelists here and appreciate all the work here. We will be reverting to all with changes, again, to the investor guidelines based on the feedback that we've received here. So, Larry.
We're now coming to the tail end of the day's discussions, and we want to basically take some closing remarks and look at the way forward. It's my pleasure to bring first to the stage, from the Embassy of the Kingdom of the Netherlands, and on behalf of the Netherlands Minister of Foreign Affairs, please welcome Liane Huben, who's the Deputy Head of Mission at the Embassy here.
Well, good afternoon, almost good evening, ladies and gentlemen. I understand I'm going to be here all by myself. I thought we were going to be in a group, but apparently we're going to be one at a time. But let me start by congratulating you all. You organized this fantastic Responsible Finance Forum. You managed to get all the stakeholders together. All of you are in dialogue. All of you want to accelerate responsible investment in digital services. You are all aware of issues and problems, and I even heard some new words like the sandbox. It's been really enlightening for me. Anyway, on behalf of my colleagues in the Ministry of Foreign Affairs in the Netherlands, and especially Sandra Louiszoon, who most of you will know, and she would have loved to be here today, but I'm replacing her, and I thank you for giving me the opportunity to speak here today. The Netherlands is a co-founder of the Responsible Finance Forum and co-founding signatory of the Investor Guidelines that were also very much in the light today. We also have the support of Queen Maxima of the Netherlands in her role as the United Nations Secretary General Special Advocate for Inclusive Finance for Development. She supports all our efforts to build a responsible and inclusive future for digital finance. The Global Findex states that about 1.7 billion adults remain unbanked, so they have no account at a financial institution or access through a mobile money provider. And today, over 16 million adults in Tanzania do not have yet access to financial services like savings, payments, credit, and insurance services. But I also learned today that the Bank of Tanzania is working very hard to reduce those numbers. With the adoption of the UN Sustainable Development Goals, we committed ourselves to eradicating poverty, ending hunger, and reducing inequalities, while ensuring decent work and ensuring economic growth. Financial inclusion is fundamental to achieve the Sustainable Development Goals. The Global Findex is clear and shocking. 1.7 billion people are financially excluded. They are not served by financial institutions, excluded from the financial and economic system, often even resulting in total exclusion from the economy as well. They too have to participate in a meaningful way in inclusive economies. They too deserve a sustainable livelihood and a decent job. Economic participation is not a luxury, but a basic element in every society. Mobile phones and the internet have now given rise to a new generation of financial services. Using these services does not require sophisticated devices, and in sub-Saharan Africa, relatively simple text-based mobile phones have powered the spread of mobile money accounts. Smartphone technology is increasingly being used for transactions in some developing economies. In Tanzania, I have seen numerous examples. The NMB Bank has recently introduced a mobile phone account package, including a self-service account that can be opened on a phone and cashless using Scan to Pay. We are all excited that with technology-enabled innovation in financial services, what we call fintechs, becoming service providers for digital finance in developing countries. This will accelerate financial inclusion, and then particularly for underserved populations and for vulnerable and low-income entrepreneurs in agribusiness, in rural areas, and for young and for women entrepreneurs. According to the McKinsey report, widespread adoption and use of digital finance could increase the GDP of all emerging economies by 6%, or $3.7 trillion by 2025, and create 95 million jobs across all sectors. Think of the contribution to economic growth 1.7 billion financially excluded persons could make. And what can we do to support their small businesses to grow with, for instance, access to safe payment, savings, credit, and insurance systems? Fintechs can play a transformative role. Technology-led innovations are creating new solutions for customers and small businesses with services designed around their needs that can help them improve their lives. And the speed and complexity of technology-enabled innovations make them very difficult to regulate. It's therefore important that regulators collaborate with fintech companies to find solutions, and that's exactly what everybody's been doing here today. Establishing a robust, ongoing dialogue between fintechs and regulators is a necessity to ensure an environment that supports innovation while protecting customers. To make fintech work for customers who are excluded or underserved by the formal financial system, we need the infrastructure and a set of policies that allow innovation to flourish. The sandbox, I think. These prerequisites for success include connectivity, digital literacy, ID, data protection, and interoperability. Responsible digital financial inclusion is essential for achieving our strategic priorities of creating markets and opportunities. The Global Findex also states that mobile phones and the internet can drive financial inclusion only if they are underpinned by the necessary financial infrastructure. This includes both an adequate payment system and a physical network to deliver payments to all corners of an economy, both urban and rural. Acceleration of financial inclusion through innovation and digitization also increases risks regarding consumer protection and privacy. Think of fraud, data breach, and security issues, and blacklisting for missed repayments. To ensure that people benefit from digital financial services, governments should also ensure appropriate regulations and consumer protection safeguards, such as data privacy, cybersecurity, and fraud prevention. Risks of indebtedness, as well as privacy violations, have gained new dimensions in our digital era and need to be addressed by the private sector as well when offering digital services. Africa is now at a critical juncture. We need more collaboration between private and public sector players. Messages need to be put into action, together with clients who will ultimately drive the future of digital financial services. In June this year in Amsterdam, IFC and Goodwill Investments launched the guidelines for investing in responsible digital financial inclusion, which many in the industry immediately accepted and committed to follow up. Wim van der Beek of Goodwill, who you have already all met, present here today, has been instrumental in drafting these investor guidelines, which are a good start in indicating and addressing the risks and implications of digital finance. It is important that investors and fintechs know the risks and know how to address these risks. As the guidelines are developed by the business sector itself, we of course also expect mechanisms to be developed for effective supervision and compliance by the sector. The Netherlands therefore is very happy that we co-hosted the launch and we signed the investor guidelines. And we are also supporting the further development of the guidelines. And we call upon all who have not yet signed to join us. Thank you very much. Asante sana.
Thank you, Leanne. I was going to try and say thank you in Dutch, but I think I'll mess it up. Dankjewel. Awesome. Oh, wow. If I keep doing this, I'll start speaking Dutch over here. Okay, next to give his closing remarks and the way forward is Riyad Nawar, Manager Financial Institutions Group Advisory for the Africa region at IFC.
Thank you very much. They told me in Kiswahili I can say habari and jioni. Bonsoir. So I know the day was long and impressive. Look, I spent 10 years at IFC, and since I joined IFC, I was every week somewhere, traveling in the airport. And despite that I am 49 years old, I still watching the plane taking off, wandering our eyes. And I feel the same impact through digital financial services. Every day we are surprised. Every day we are impressed. And thanks to digital financial service today, we can hope in improving the financial inclusion to reach billions of people. How this could happen without digital financial services, without all of you. Every day you are really going beyond any limit in terms of how financial service could look like tomorrow. You know, I was involved from the beginning when I joined IFC in developing access to finance. And when we design a very big SME banking project or supporting a microfinance, when in terms of impact we think that we can reach 10,000 SMEs or 30,000 SMEs, it's like a big deal. Today, when I look at what we are doing, myself, my team, and all the global IFC FIG advisory, thanks to partnership like the one we have with MasterCard Foundation, through only 14 projects in Africa, we reached 11.2 million clients that were able with our partners to bank. This could never happen without digital financial services. And thanks to the real impact we are seeing in the market today, we are talking about responsible finance. And I am sure all of you, innovative you are, I believe that for the industry sustainability, I am sure that the investment guidelines will be implemented. We saw, and Martin and other colleagues can really share their feedback, that we are working with many banks in Africa that they are in full compliance with the bank regulation, but because we partner with them and they are moving beyond that. They are trying to implement the banking international standard following the international benchmark, and I am sure for digital financial services we will reach the same level. So let's continue thinking free, being innovative, let's work together, let's continue to impress our eyes, and I'm sure together we'll make a revolution. It's already a revolution in Africa and elsewhere, and we will definitely together achieve the hope of millions to become banked, to access to market, to access to knowledge wherever they are, wherever the financial infra or the real financial infrastructure looks like in Africa. And this is, I think, also what makes digital extremely fascinating. We can impact through digital a country like DRC, or a more sophisticated country like Kenya, or a more developed in terms of intra-market like Morocco. So this is all about digital. Again, thank you very much for a wonderful day where you are continuing sharing your knowledge. Let's continue sharing the knowledge, and IFC, again, it's all about sharing knowledge. Thank you very much.
Riyad, merci beaucoup. Next on stage is Judith Frickenstein, Financial Sector Advisor at GIZ or GIZ. She was here at the beginning and she's here at the end again.
Thank you very much. So I'll be brief. I'll be really brief. I think we have heard a lot of interesting discussions today. And so the question was what needs to be done next and what are the key takeaways. And so, yes, first of all, I was happy to hear in the last session that for the investors, this event was useful, also the guidelines. So, because I think one crucial element is that we have investors who make their minds of the impact on clients in the business case they're investing in. And yeah, happy to hear that the forum gave guidance on this. And so we talked a lot about consumer education, and I think it's crucial also what can the industry do, but what can regulators do. It's crucial to think together consumer education with consumer protection and data protection regulations to not leave all on the customer alone in the responsibility. And further key takeaway, I think digitization provides a lot of solutions, and I think there are a lot of smart people out there who can improve on the services provided, or who can continue providing digital financial services, yes, who promote financial inclusion. So to summarize, when we've had the Responsible Finance last year in Berlin, and we were sitting together afterwards with the partners and thinking of having a regional one, I think it was a good idea, because talking about digital financial services, we had the discussions within the last years with different foci, but we did not have a regional focus, and between the regions, the challenges are, I think, and also the opportunities quite different. So it's also great to have had it with the regional partners from Making Finance Work for Africa. And yes, just an outlook, so BMZ and GIZ will stay engaged in the discussion with our responsible finance partners. And we are now had the 9th forum. And yes, we are, I think, open for more partners. Also, investors' involvement is highly appreciated. And so I would like to close with that we have heard a lot, and I think and a lot of recommendations have been written, and it's now that we all go home from the different perspective, be it the regulators or the industry players or the development partners, or the investors, that we go home, make our homework, and start implementing. So thank you.
Dankeschön. Judith? I could keep going the whole evening. I'm just really having fun. We're just getting started here. And last but not least, please welcome back to the stage David Eshekbor, coordinator of Making Finance Work for Africa at the African Development Bank.
Good afternoon. I don't have a prepared speech, so what I thought I would do was just summarize my key takeaways from the day's discussions. First takeaway is it's all about the clients, right? If you keep your client focused, if you try to do what's best for your client, then you will do responsible finance. Secondly, it's from my perspective again, it's that the landscape is evolving very quickly. Not only in financial services generally, but particularly in digital finance. And with that, there are new risks. So we have to be flexible. We have to be innovative in order to keep ahead of the game. Third and final point is that I think we've heard a lot about
regulation, and the regulators need to do this, the regulators need to do that. My takeaway from that is that it's an ecosystem approach. You need the regulators to work with the fintechs, with the industries, and actually with the consumers as well, to make sure that we get to the point where we want to get to. So those are my takeaways. I think we at Making Finance, as I said this morning, are very proud and happy to be involved with this. We welcome the guidelines. We don't invest ourselves, but we do welcome them as a significant contribution to taking this forward. And so that's it. Thank you very much. I'm aware that I'm standing between you and some lovely drinks, so I won't take up any more of your time. Thank you.
Asante sana. And that brings, ladies and gentlemen, the Responsible Finance Forum 2018 to close. And before we get there, Laurie, I was going to really do a huge introduction for Laurie, but she really wants to make sure that she thanks a lot of people that were involved in this. Laurie and Abdelkader have worked really hard with a lot of other people to make this happen. So I'd like for you to come back and thank some of these great guys who made this possible.
We had another 7 minutes to go, so this is plenty of time. So, AK, my partner in crime here, really wanted to thank, there's a lot of work that goes behind this, so I would like to take the opportunity to call on some names and ask them to come up to the stage, and that includes Jennifer Carey, are you here? Kira Crown, Costa, are you here? Okay, great. I see Elena, I see Gerard, I know I'm gonna, forgive me if I hope I don't, okay, no. Josek, are you here, Josek? Margaret? Let's see. Of course, Judith, back again on the stage, and Stephanie. I thought I saw Martin somewhere in here, but did he just slip away? Okay. Yeah, so this was really quite a collaboration. This is the first year that we had introduced the guidelines, and again, in a region that's a very important priority for us. And it was in Dar. None of us had, presence necessarily here, but we were able to work because of our country office, and actually is Dorothy in here somewhere? Has she left? So she, okay. Yeah. So we're really grateful again for all of you for coming here, and there's a lot of exciting work, a lot of good work to be done yet ahead, and we're looking forward to the next year. And stay in touch. We will come back, as Wim said, we'll be discussing more about this, in fact, immediately, and have some more concrete actions that we can take. And thank you again for being here and for participating. Please have lots of drinks, enjoy, and enjoy the rest of the week if you're staying for the MasterCard Foundation and IFC event. Thank you.